Hey everyone, welcome back to Corporate Decoder. Today, CTOR just filed a current report regarding their third quarter financial results, and I am seeing a couple of things that are worth talking about. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting their earnings, and it looks like they are aiming for break-even soon, which is a good sign. But some details in the filing suggest we need to keep a close eye on the specifics. So what we have here is a Form 8K, which is basically a report companies have to file when something important happens. In this case, Citius Oncology Incorporated is reporting their financial results for the third quarter of their fiscal year 2026. They released a press announcement about these results on the 14th of August 2026, and that press release is included as part of this filing. Citius Oncology Incorporated, as you probably know, is in the healthcare business, specifically focused on drug manufacturing, dealing with specialty and generic drugs. The company has a market cap of about $85 million, and their stock has been trading around 91 cents recently, with a 52-week range from 49 cents to $2.25. Now, the key piece of information here is the press release announcing their financial results. One of the headlines we saw states that break-even is on the horizon for Citius Oncology, which sounds promising. This means they are getting closer to a point where their income equals their expenses, so they are not losing money. Another headline from MarketBeat pointed out that they missed earnings expectations by 1 cent per share. This is a small miss, but it shows that even with positive momentum, they are still facing some challenges in hitting those precise financial targets that analysts are looking for. This section of the filing confirms that the press release detailing their operational and financial condition for the third quarter of fiscal 2026 was issued on the 14th of August 2026. It is important to note how they word this part. They are saying the information furnished in this item, including the press release, shall not be deemed filed for purposes of Section 18 of the Exchange Act. This is a common disclaimer. It essentially means that while they are providing the information, they are not taking on the same level of legal responsibility for it as if it were a fully filed document. This is usually done for press releases that offer forward-looking statements or preliminary results that might change. Under this section, they list the exhibits that are part of the filing. The most important one here is Exhibit 99.1, which is the press release dated the 14th of August 2026. They also include Exhibit 104, which is the cover page interactive data file in IXB Braille format. This is basically a machine-readable version of the filing's cover page, designed for easier processing by computers and regulators. The filing is signed by Leonard Mazou, who is the Chairman and Chief Executive Officer of Citius Oncology Incorporated. This is standard procedure, indicating that the company's top leadership is responsible for the accuracy of the reported information. Looking at the broader context, Citius Oncology is a specialty and generic drug manufacturer. The fact that they are reporting results and aiming for break-even suggests they are in a phase of trying to stabilize and grow their business. However, the missed earnings expectation, even if by a small margin, is something to watch. It could indicate that their revenue generation is not quite keeping pace with their cost structure, or that their sales forecasts are proving a bit too optimistic. Historically, companies in this sector that are working towards break-even often face a delicate balance. They need to invest in their product pipeline and operations, which can be expensive, while simultaneously trying to control costs and generate enough revenue to become profitable. For a company like Citius Oncology, with a market cap of $85 million, every penny counts. Missing analyst expectations, even by a cent, can sometimes lead to a dip in investor confidence, especially if it signals a trend. When we look at institutional ownership, Armistice Capital LLC holds a significant 9.9% stake, and Bank of America holds 4.1%. These larger holders can have a considerable influence on the stock's movement. The fact that a director, Jonathan Perry, filed a Form 3 showing no common shares, as reported by StockTitan.net, is also an interesting detail. A Form 3 is an initial statement of beneficial ownership of securities, and if he holds no shares, it is worth noting his position within the company. What I am actually looking for is consistent execution on their path to profitability. The market is always looking for signs of sustainable growth, and while break-even is a critical milestone, maintaining it and then moving towards actual profit is the real test. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.